Well, hello everybody and welcome to Swing Scans. This is Ken Calhoun, your host, coming at you live on Saturday, December 5th, 2015. Welcome to Swing Scans. As we get underway with today's live broadcast, let's take a look at some of the very best charts and how to trade them. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold. By watching this, you agree not to make actual trades. A couple of quick guidelines for all of you. One of the things that I encourage you to do is make sure that you try and learn how to swing trade the markets with things priced minimum of $20, maximum $70 a share. Overall, usually $30 to $50 a share is a good middle range to work with. At least 10% price action on a 15-day chart. So say a $30 stock that goes to $33 a share or better. And volume of at least 1 million shares a day. In terms of the core trading patterns that we like to cover, we go through 15-day and 90-day candlestick chart patterns and look at 15-day highs, cup breakouts, things following 90-day wide range candles that then continue to get additional buyers that we can profit from and leverage into our trades, as well as what I call acceleration ramps. And that's where you get a steady uptrend that then gets a sharper, more excited price action breakout, especially on high volume as a confirmation trigger to look at. So with that, let's go ahead and jump into our swing scans for this week ahead. You can see our S&P has been relatively quiet as of late, although yesterday's price action was really good. So it's a good upside run from the 2050 to 2090, 40-point run in the S&P yesterday. So with that bullish cup forming, we may well get some upside breakout volatility in the broad markets to work with. So now, as you'll know from the Swing Scans members area, what you guys get each week is a look at not only the tickers that we cover, but very specific entry prices to use as well. Okay, and again, just paper trade these. They're all for educational use only, but we've got 10 of the main picks. You saw how well the last week's ones work. Bonus picks of things that are under 20 for those who like trading the less expensive stocks. I also cover 2 of those for you, as well as 2 ETFs. Nugget, the gold miners have been strong lately, so Nugget and GDX. You'll notice too in the members area we also have last week's alerts. So that way it gives you not just 1 week, but 2 kind of running weeks worth of alerts each week to work with. So you can pull up the charts from this week's featured 14 charts, click through those, see which of those you want to maybe take a shot at, but also take a look and keep on a watch list the ones from the previous week as well. So that's another strategy point that I would encourage all of you to use as Swing Scans members. So let's go ahead and take a look at this week's charts and get underway. The first chart I wanted to present for your consideration is Broadcom. And the thing I like about Broadcom is the gap continuation. We have a minor gap, or I should say a series of minor gap there, another minor gap here, but a large gap that's continuing up lately on Thursday and Friday, right? So with that kind of a jump start and an accelerated breakout pattern, this chart may be worth considering for the week ahead. It's a little pricey up at almost 60 a share. I have 58.50 as the long trigger for Broadcom because of the strength of this chart. There's no selling pressure in sight here, right? It's all a story of buyers coming in from 51 up to 57. So that's over 10% of the price, right? $50 stock, at least 5 points. That's 7 points of price action. So keep an eye on Broadcom. Another good continued move up chart despite an S&P that's been kind of up and down and even sold off earlier. This one's held its own like a piece of string or dental floss or yarn that's been tied tight in an uptrend is Autodesk, and it's up to 65 now. The trigger point I've got is 66.40 for that, and I like the fact that it's gotten continuous buyers and a nice channel uptrend here going from 58 to 65, so a 7-point run on a $60 stock. Autodesk also looks healthy. GNC. What I want to do today too is, in addition to going through the 15-day charts, we also look at the 90-day charts and some specific candlestick breakout patterns and confirm it with Western technicals like bullish cups or strong trend accelerations or high volume or other things that help you make sense of all this and simplify your trading approach enormously. So this is enough to pay attention to next week. What I want you to do is figure out how to profit from it and how to make money with these trades. Okay, 32 is major resistance in GNC, our next featured chart. My long trigger is 32.30. So I expect it's going to stall out near the whole number. You always do, by the way. That's why I never put a trigger right at a whole number that's near a previous resistance area like 38. Instead, we want to wait for it to break down 30, 40, 50 cents above the high. And I'm on a $30 stock, I would use 32.30. So, and thanks to Harvey's asking, Broadcom's a takeover candidate. Does that matter? Yeah, in fact, that's a big plus. If the rumbling on the street is that people may buy something out, often that'll lead to speculative buying that lifts it up even higher before buyout offers tendered. So, yeah, good to keep an eye out for that reason as well. We've got a lot of consolidations and merger and acquisition, M&A work in industry, and oftentimes some of your very best stock plays move in anticipation of said buyout rumors that are on the street. You start to see people building their positions in anticipation of a big upside gap that then, kind of flatlines up there because that's the buyout price. So that's always a good way to buy into a breakout continuation, but only if price takes out new highs. And that's why I set the triggers above current resistance to keep us away from false breakouts and in on good ones. But a good spot from Harvey, thanks. GNC, nice uptrend. I don't see anything wrong with it. It did do a big kind of mother of all sell-offs and then promptly rebounded not only that day, but recovered its entire price action as well. So GNC 32.30 makes sense up here somewhere, right? We don't want to fool around with it down in the current trading zone and wait for it to break to a new box trading range. If you've ever read the great book called How I Made $2 Million in the Stock Market by Nicholas Darvis, Darvis boxes is basically a concept in which you look at trading into new box trading ranges. And that's a very good concept. I use that too. I trade cup breakouts, which basically is a box trading range defined by a cup, which looks like the letter U. Previous resistance, sells down, comes back to life, and then punches out to a new trading range. Playing in that is how you do breakout trades. And so we have a nice cup breakout pattern in GNC, 32 resistance. We'll see if it breaks out over 32.30 next week. Next up, Hawaiian Airlines is one of the two best airline stocks, Southwest being the other one. All the airliners have been strong on the weakness in oil, and we got 40 as major resistance. You could day trade within this region, but personally I'd wait for a swing trade till we get over the 40. And again, in the members area, you can see the specific entry trigger 40.5. Now, why do I not use 40.2 or 40.3, you might ask? Or why not 39.30 for that matter? Well, I'm glad you asked. The reason is, if you ever see a lot of recent selling, despite a bounce back, you want to use that as a reason to be cautious in that trade and kind of put it in the penalty box or be more skeptical about it actually continuing on up, even though it's been in an uptrend from 34 to 40, a 6-point run. The fact that we had some recent selling tells me you want to be cautious in this whole region right here. Instead, wait for it to prove itself and take out new highs on a new rush of buyers, a new institutional high-volume traders that pull it into new breakouts. So the point is, whenever you see recent selling or recent narrow congestion, the counteraction or the way to control for that as a trader is not to set an entry right above new highs, because those will usually be a false breakout. I'm an expert in avoiding false breakouts. That's how I make my living in my trades. I avoid false breakouts and get in on continuation ones. So you want to kind of like body armor as a police officer or military soldier would wear. You want to have some body armor in your trade by avoiding false breakouts. And the way to do that is just simply not to trade it. Don't engage. Take a step back until a new wave of buyers comes in to lift it. So it's on the radar. We're kind of skeptical or cautious until it takes out 40.5 in Hawaiian Airlines. So, we'll see if that continues on up. Another one from our solar sector that's a nice hot stock. I was like that's an old Wall Street thing. Solar stocks are getting hot. Let's see if it ramps up to new highs. Jimmy, tell them what they've won. Well, you've won an all-expense paid trip to Breakout City. We'll see if Solar City, you got a cut pattern there and got an acceleration ramp. That's a good example. Classic Ken Calhoun acceleration ramp, as I've spoken on at New York and Vegas for my Money Show Trader Expo appearances in stocks and commodities and equities. Get a steady uptrend that leads to a 45-degree angle classic strong trend breakout. It's kind of congesting up here at the top, so we stay clear right now, but we do jump on board that trade. At least I'm going to jump on board this trade if it does take out new highs. And my trigger point for Solar City is, drum roll please, 38.7. Okay, so I'll go long in this if it buys over 38.7. And again, if you have any questions, feel free to post them. I will answer all questions at the end of today's broadcast in 20 minutes. So we got till the hour, and then I'll answer questions at the end. So feel free to ask any questions. I want to help you become better traders, right? If I can help you make money as a trader, will you stay with me? I would hope so, right? You invest this much in learning with me and get back this much or even more, as so many thousands of traders have over the last 15 years, then we can keep doing business with each other. So it's in our shared interest for you to make money as a trader and avoid stops, or keep the, not entirely avoid them, but keep them to the minimum cost as possible, where you have better profitability in your trades. And that's my goal with this and my other services. So anyway, good Calhoun acceleration ramp, bullish cut pattern a few days ago. Nice 45-degree angle breakout. That makes sense to buy over 38, and I've got a 38.7 long trigger for you in Solar City. Next chart is Kihu. This one's a little more mild-mannered. Okay, it doesn't have a recent acceleration ramp, but it does have a window or a gap in its favor that, as typical, continued on up in trend. So we have a nice gap continuation in Kihu. The long trigger in that one is 72.50. And again, some of these are getting a little pricey because they ran so nicely lately. It had been a $60 stock. I'd been calling this for you guys long last month as well. So congratulations if you've done longer term swings. You see how well these charts work, right? If you look at the daily, I've been calling Kihu long the last 2 months for you. It's gone from 43 to 70. You could almost doubled your money on my call, right? Boom! That's how we roll at Trade Mastery. I'm an expert in this, and I want you guys to do well. Anyway, I like Kihu. It's a good chart. Such a nice mild-mannered chart. Continues to run on up. Perfect for position sizing or scaling in, right? If you want to scale in, the type of charts to do that with are ones that go a little something like this. On a 1 and a 2 and a 1, 2, 3. Boom! You don't want to fool around with scaling and position sizing in charts that go up and down, because you'll just get stopped out and get frustrated. What you want is charts that have a nice 45-degree angle continuous uptrend, like Disney did for the last 3 years, right? I'm a Disney shareholder and happy about it too, because look how much it's gone up the last few years. Well, anyway, Kihu, another good chart going from 40-ish to 70-ish. That's good. Scale in, add a 50, 100 shares here and there, and you start to build a trade. So that's how you trade. Next up, AEM. Along with many of our gold stocks, this one took off yesterday, and that's Agnico Eagle Mines. I always forget the right pronunciation. Agnico, I want to say American Eagle, but it's Agnico Eagle Mines Inc. Anyway, it came to life. It's alive. Bzzz, Frankenstein chart. It's alive. No, we got a minor gap continuation, and look at that. Look at that run. Minor gaps that continue are my favorite signature trade. We've got a bullish cut breakout in AEM, and it does continue to take out new highs. So the reason you'd want to look for this is, look at the volume. We've got a new 15-day high volume. Look at the strong opening range volume of the first half of the trading day compared to any other day. It's got the highest volume on its breakout, so it's likely to attract new buyers up at new highs. Now, another quick tip though, and I have this on a couple of this week's charts. Another good, quick professional trading tip. I've traded literally millions of dollars worth of stocks and ETFs. I know how to trade. Don't buy nines. So don't buy anything with a 9 in it. That's a seller's price point, not a buyer's price point. It looks expensive to everybody who bought at 25, 26. I'm happy to sell to you at 29, right? So you don't want to be buying a 9-priced instrument, and that's why my long trigger in AEM is priced up at 30.2. I'm going to wait instead for it to break over that. So even if it doesn't hit next week, that's why you keep it on the radar for the week after, right? Because it may well hit. Now, you could take a shot at, say, 29.6, but I would expect it to stall out near 30, because everybody who's been long from in the 20s is going to be selling at 30, or at least scaling out because it's reached a good price target. Those decade values, by the way, I have institutional clients, and we use decades as price targets. So if you ever work with Wall Street traders, they're going to say, did they hit the dime spot? Meaning, did you hit the 10 cent? I'm a player. I know how to trade. I teach you guys this stuff. Did we hit the increment of $10 in price? So if you bought from the low 30s, you sell right under 40. If you bought somewhere in the low 40s or mid 40s, you sell right under 50. So what you don't do as a home retail trader, which is what most of you are, is don't buy right under, say, 30, or don't buy right like 50 cents under 30 would be a horrible place to buy, right? Or 50 cents right under 40 or 50 or 60 or under 20. Any increment of $10 a share is going to be a sell target for professional traders. That's where I sell. That's where I advise all my client companies to sell at, is into decade dime values. So it becomes kind of a self-fulfilling prophecy. You need to have access to that here at Swing Scans each week, right? I teach you how to do that. Anyway, AEM, yeah, it's worth trading, but not till it breaks 30. Reader's Digest version. Next, boom, the other of our airliner stocks. Delta and United and American are okay, but the two best are Hawaiian Airlines and Southwest, the smaller cap instruments. And you could see that good gap breakout continuation in Southwest yesterday. Again, remember, nice minor gap that gets new buyers above the previous high by at least 30 cents or so. So that's how I day trade. I'll go and say 30 cents above minor gap, previous day's high. For swing trades, this makes sense if it does continue up again over the 50. So my trigger point on Southwest is 50.3, and that's in the members area alerts box. So I don't want to buy 49.80 because it's likely to stall near 50. Now, how many of you, show of hands, have ever been stopped out by a false breakout where it looks good at the time, but then all of a sudden it's as though the trading gods had it in for you? Dun dun bum bum, and it goes right back down, 50 cents after you got in, and then you take a $2, $3, $5 stop and get frustrated, and then it runs up, 10 points without you over the next couple weeks ahead. Very frustrating. Boo-hoo. Well, avoid that. Do something differently, not only the rest of this month, but into 2016. Make sure you're making profitable trading entries and exits based on skilled technicals on avoiding false breakout regions. That's my expertise. My core expertise is getting in on good breakouts and avoiding false breakouts. That's all you need as a trader, right? That's all you get. So that's all you need. So anyway, don't buy right here, but wait till it breaks over the 50. And my trigger point on that's 50.3 on Southwest Airlines. Next up, we've got a little bit of Zen in the house. This was one of my alerts from last week. Congratulations. Did any of you take it? Got over 100 of you here. I hope that many of you took it. I called Zen last week as a long breakout. If you took that, and by the way, you'll find that often, especially useful information for those of you who are new to swing scans, if I have, say, a couple, three that are especially good performers from last week that are so strong they look like they'll keep going up this week, which oftentimes we'll have, I will carry those triggers and give you new triggers to use, right, for the next week. So, if Zen continues. So our trigger point for next week is 28.20. So that's about 60 cents above the current high. We get over 28.2, we go long. You could take a shot earlier, but personally, I'm going to be a little conservative in this market and use 28.20 as my breakout trigger. If it runs up to, say, 32 or 33 next week, I will keep this same ticker alive for you the next week and give you the new entry trigger, which is good for position sizing or scaling. If you initiated my trade, say, last week or this upcoming week, and it keeps running on up for you, famously, how do you then trade it afterwards? And again, you want to trail a stop, say, 2 points under the inside market, and then add to or scale into a position on a breakout continuation. So Zen, a good rock star chart, right? Another classic Calhoun acceleration ramp. It did a nice steady congestion, slow uptrend, and then a 45-degree angle breakout, kind of a hockey stick, right? That tells you new buyers are coming into that. It's not by any stretch of the imagination the end of the story. Oftentimes, more often than not, that's the start of a new explosive move up. So you want to be able to trade those intelligently by looking for those together with me in swing scans. So anyway, Zen looks good. Nice high volume breakout continuation. And also, too, thanks to all of you, or a handful of you, I should say, who've been referring colleagues and coworkers and friends. I really appreciate it. It's always good to get new subscribers on board. It's good to, work together as a community or a team of traders. So certainly appreciate the referrals from those of you who've been sending new customers and new traders my way. It's good to work together as a team to get successful breakouts that finally I learned from a guy who actually is a real trader and knows how to trade. So good to see you guys here. Let's see. Excuse me. Sometimes my nose itches. I'm in a high pollen count area here. Anyway, QUNR was one of my calls last week. Bullish cup, double bullish cup breakout continuation in its uptrending channel. QUNR, the trigger is 51.40. Okay, so I want to wait for it to get over that 51 and be suspicious about it right here. But if it does reestablish a new uptrend over 51, I want to jump on board that trade. And dive into the pool. The water is warm. Come on in. It won't bite. 51.40 is the continuation trigger for you in that. Question from Ben. It seems I'm bullish on my picks. Do I also list those as bearish? No, because I don't like swing trading short. Because in case there's a gap up against you, you can wipe out a big piece of your trading account. I'm all about risk management, so I never swing trade short. Because even though, I guess back in 2008 that would have been the right decision, but I like to swing trade to the long side. Day trading, I'll go long and short depending on, because I'm all cash at the end of the day. But swing trades, I only like to start off small size long swing trades, and we go up on continuous moves up. So I want to keep it simple for everybody, and the very strongest, best breakouts like this one was, and Zen last week for our traders as well. So, but good question. Thanks, man. Okay, cheap charts. We got a couple of them. P-Lab is one of them. If you do trade under $20 stocks, I've lost the most money trading cheap charts. So overall, I mean, I've made winning trades here and there, but overall I lose more than I win in cheap charts. I do better in the higher priced instruments, over 20 to 30, 40, 50 bucks a share in that region. So that's my own. Your mileage might vary, but I find that cheap chart trading is much more a hit and miss proposition, and I don't want to do that. I want to make more money, not do half and half. Some win, some don't. I'd rather do most of them win, and a few of them surprisingly don't. And for me, that's why I focus on, say, $30 to $50 range for most of my swing trades. But I know that some of you do trade the cheaper charts, and so if you do, it should go a little something like this. P-Lab went from 10 to 12.5. That's a 20% run in just a matter of a couple of short weeks. I like the high volume breakout. And again, another good classic Calhoun acceleration ramp. You've got a steady uptrend, then a sharper kind of a hockey stick breakout on a gap continuation. That's all good. P-Lab, my long trigger is 12.8. So I'm going to use relatively tight because it's such a good strong chart. So 1280. Okay, for the breakout. The other one is a more steady uptrend, GFF. Right? And this thing's gone from 16 to 19. A 3-point run on a teen price stock is pretty good. Again, I want to be skeptical up here and wait for it to break over 20 because, again, I don't buy 9s. So even if it doesn't hit next week, keep it on the radar for the following week, 20.2. For ETFs next week, I like Nugget is a really good breakout bullish cup pattern continuation uptrend the last few days. And see, yesterday is a really good rockstar chart in Nugget, so that makes sense to keep on the radar for the week ahead. Keep on your watch list. My long trigger is 32.40. That makes sense. That's around 40 cents above the nearest whole number. So 32.40. You could take a shot a little earlier if you wanted, but personally I'm going to wait till 32.40, at least in my own account. 32.40 for Nugget makes sense. It's a good breakout continuation chart. And the last one is GDX. Okay, it's another way to play the gold mining sector to the long side. It went up 80 cents on a $15 stock, so not too bad. Volatility is only just under 2 points on a $15 stock. So yeah, it meets the 10% rule, but it doesn't have the same kind of multi-point range volatility, say a Zen or an Autodesk or a Broadcom or a GNC or some of these others, Solar City, that have kind of a wider point range to play with. So that makes sense. Okay, now let's move into our second phase. We got about 8 minutes left here. I don't want that. I want daily charts on the 90-day. Let's take a look at each of these charts and now see if you'd go heavy share size or light share size based on the candlestick pattern. Okay, we've got kind of an engulfment up here. I would do light share size in Broadcom because the precedent trend is relatively choppy. Even though we've got a really good uptrend lately, I would do light share size in Broadcom because we don't have a nice big tall green candle in an uptrend. I would do heavier share size in Autodesk because we have my classic cup patterns. You got a bullish cup and a wide candle at the right side of a bullish cup going long above that makes sense. I've got competitors that ripped off that technique, but I originated. You look at a bullish cup, I'm an expert in cup patterns, use a wide range candle at the right side of the cup to initiate a new trade. Well, hey, if we had a TARDIS or a DeLorean and go back in time, that would have been helpful. For the rest of us, we got to trade the right side of the chart. So I like the fact that we're up near 66. I'm a big Doctor Who fan, even though Clara Oswald unfortunately met her demise in the most recent episode. I'm a Whovian. I'm a big fan of science fiction and Doctor Who. Anyway, but I digress. Anyway, the new Doctor Who, Peter Capaldi is great. Anyway, Autodesk, I do heavy share size. It went from 44 to 64. Nice 20-point run in that. So 20 points under your belt. We'll see if that's able to take another bite out of the market and punch on up. I do large share size in Autodesk. GNC, any bounce, this would be a counter trend trade, would be a small share size because it's speculative, playing a bounce in something that's sold down from 48 down to 28 and is now trying to come back to life. You do light share size in anything that's not a strong uptrend. Hawaiian Airlines is a strong uptrend, so we do heavy share size in this. Despite a few red recent candles, the strength of its base going from 24 to 40 is almost doubled. In the last October especially was a good month, going 23 to 33. I do heavy share size in Hawaiian Airlines. Solar City, because it's a bounce, however, we do light share size in. And by light, I mean maybe 20 shares or up to 50 shares at the most. Heavy share size might be 100, at most 200 shares. But overall, in general, you want to keep all your trades 100 shares or less. Throw out multiple trades. Light share size might be, for a new trader, might be 10 or 20 shares. An experienced trader might be 50. For heavy share size, a new trader might be 50 shares for heavy. For experienced trader might be 200 or 300 shares. So it depends on your skill level. But in general, play light is right and tight is right. Kihu, I'd play heavy share size because of the strength of the trend. It's a great trend, so I'd play this one relatively heavily. At least that's what I've done. AEM, light share size. Despite a nice big day yesterday, it's in context of a sell-off that's bounced. Right? So it's a recovery pattern, and because of that, I would do light share size in AEM. Is this helpful? I like to give you scaling and approximate share size guidelines for each of the charts in addition to the very strongest breakouts. So you get both sides of it. You get both the scanning and the trade management all rolled into one with swing scans. So that's my best swing trading training for active traders. That's why we're over 170 people. It's good to see big turnout. Southwest, I do heavy share size. We got a nice big buyer's candle yesterday plus a nice strong uptrend. So kind of like all the arrows lining up, or green, yellow, red, we're at green, where all the signals are lining up simultaneously, so it makes for a good breakout in Southwest. Zen, I'd also do heavy share size. I called the long for you guys correctly last week, and it continues to be a rock star. I do heavy share size in Zen. QUNR, because of all the selling, I called it long for you guys last week, and it worked out nicely if you took it. But because we're right near a bullish cup, and because it had all that selling pressure making the left side of the cup before the recent buyers, I do light share size, or play it tight. And that's really important too. I can't overestimate that. I really wish I could go back in time 20 years and talk to my earlier self. I'm 51 years old. I was born in 64. I'll be 52 in just about 5 weeks on January 19th. But anyway, the point is, if I could go back in time, these are the kind of things I would tell my earlier self as a trader, that it's vitally important that you use different share sizes based on the relative strength of the pattern that you're trying to trade intelligently. So anyway, this would be light share size because it's a recovery. It's not a all systems go chart like, say, the Zen chart. So all charts are created differently. You should not make all your trades the same share size. You want to make them different based on the strength of the chart. Like how aggressively you play a poker hand, not to tip your hand, but on the later streets, on the turn in the river, you play heavier size depending on the strength, not on the pre-flop or the flop. But anyway, I play poker tournaments in Vegas a lot. It's fun. Anyway, it's fun to take money from people out there. Ha ha ha. I like to go. I shoved all in with I had a ace 10 on a 3-club board, so I flopped the nuts, right? And some guy, he had on a 1-2 table, he put in $85. I think it was right. It was a post flop. He should put in $85. I said all in. Fortunately for him, he folded, and I flipped it over, and he said, "If you got the nuts, you got the nuts." And the nuts are what you call the best hand in poker, anyway. I said flawless victory, and the table laughed, and we had a good time, and I tipped the dealer. And it's fun. Anyway, I digress. That's how I get my social action in, is to see real traders at the Money Show Expos and to play a little Hold'em now and then. Anyway, P-Lab went from 10 to 12.5, so a nice acceleration ramp. This would be, I do heavy share size because of the strength. It could keep running to 15. We don't know. So I do heavy share size because of the strength of the run and the lack of any pullback or weakness. Okay, last few charts, GFF, Good strong breakout. I do heavy share size in this because of the strength of its trend. We don't see any significant sellers earlier. Nugget would be light share size because it's a bounce, and same thing with GDX would be light share size because it's a bounce. Your best charts are going to be ones like the Zen chart, where you've got a Zen-like 45-degree angle breakout that's been underway for quite some time, or this chart, the Autodesk chart, that has no sign of weakness in it. You want to buy strength, and you don't want to fool around with choppy charts. So that's what I do here for you, Swing Scans, is give you the very best, the strongest charts to work with each week as we work together as a team. So thanks so much for being here with me in SwingScans.com. I'm Ken Calhoun, your host, president of the original Day Trading University, SwingTradingUniversity.com's Trade Mastery and the rest of it. If you have any questions, I'll go ahead and answer those right now. Oh, no, thanks. I appreciate that. Question from Juan, why GDX instead of GLD? Because GLD is too expensive. That thing's $100 a share. Why am I going to spend $100 a share when for the same exact chart pattern or close to the same exact chart pattern, I can spend $15 a share? That's a big fatal flaw that you'll see a lot of the bad educators will tell people to buy really expensive charts. Why do that when you can get the same chart for a lot cheaper somewhere else? So for example, same thing if you trade ETFs. Like I don't trade the spiders, I'll trade instead XIV. Gives me the same freaking chart for a fraction of the price, right? So make sure you're looking for price improvement opportunities as a trader. The same thing is true, by the way, in sectors. For example, airline stocks, they roughly have the same chart pattern, but some are less expensive than others. Or ETFs, for example, if I want to go long the market, I'll buy XIV. If I want to go short the market, I'll buy VXX. But I will not trade the spiders, or like the Qs. Why would I buy QQQ when I could buy instead, QLD for less, or for the broad market itself? XIV is a really good way to go long the market for something that's priced much less expensive than the underlying spiders or other contracts would cost for that. So, good point. Let's see a question from Mike about, nuance. 21.8, yeah, let's see, if my trigger hit at 21.8, the initial stops are always going to be 2 points, so it's still a good chart. And that one you might want to consider too for next week ahead. So no, I've not lost confidence in it. It's a good chart. Our initial stops here are 2 points, which would be for a $19 or $21 stock would be 19.8. It'll still be alive and healthy. It's only gone down 40 cents, so that's still a very good, valid swing trade to be in. And in fact, you might want to add this one to the list for next week too. It's such a good underlying chart. I would buy it again over 22. Say 22.5 or so. But yeah, good question from Mike. Yeah, it's a good chart. And a good question from Juan about GDX. It's a question from James about no longer be able to take stops or GTCs as of February. A couple of my traders, I asked about that. A couple of my traders an hour ago told me that the brokers will be doing the stops anyway. So your broker, and again, check with your broker. I have not confirmed this yet with Fidelity or Interactive Brokers, but my understanding from a stop management standpoint is that the brokerages will now be managing that even if the exchanges aren't. So, oh, thanks. Perfect from Damon. Appreciate it. From Kaylee and Damon and Vin and Dave and Phil and John. Thanks for the kind words. Thanks, Bill, for that heads up on Broadcom. A question from Paul, can I show the targets again? Sure thing. Or the entry triggers, I'm assuming you're saying. They're here in the members area, so just log in and you can see them, but that's the entry trigger points for all of the picks for next week. And by the way, as I mentioned there too, here, all entries use an initial stop of $1.50, 2 points at the most. Use a $1.50 trailing stop. And you can also add to any winners at, say, every 2 points up. So even if I'm not on top of all the winners, because, out of, say, 10 stocks, if we have, say, half of them or more win, I'm not going to repeat all of those. I'll just handpick out the best of the two, for example, like Zen and QUNR this week. You can, as a default, scale in every 2 points. You may see my Stocks and Commodities magazine articles or my money show presentations. But on swing trades, usually 2 points is a decision criteria for either initial stop or a scale-in trigger. I like to play it a little tighter, so I use 1.5 point right now for stop values. And those change occasionally, so I will update that for you. But in general, roughly 2 points is a good decision support tool to use to manage your entries and exits. Not 5 or 10 or 15 points. You're going to play a much tighter game if you're going to make money as a trader. You have to play a much more careful game. Kind of like I love these like poker players that come in and they call everything and they bluff away, and I take all their money because they play bad hands. And I very selectively play a tight aggressive game where I'll sit there and take all their chips because I'll double down or shove, with the much better hand. Same thing in your trading. Make sure that you're trading a much tighter game where you're not playing things loose and wild, because that'll cost you money. I've blown up a couple of trading accounts doing that, or trading without a stop and hoping it'll bounce at some point, and like sticking your head in the sand and not wanting to look at how the trade's working out for a month or two. I've been through all that stuff back in the 90s, and I learned how to not do that because that doesn't work. What works is play a tighter, more careful, more intelligent game as a trader. So that should help you in your trades. And a good point from Dave. Dave is saying gold is also, GLD is also only 1% a day and GDX is 3% a day. Perfect. Good answer. That's actually the smartest answer I've gotten in recent months. So thanks for that. You're exactly right. Look at the average true range, the ATR. If you get more volatility out of it, there's more profit potential. So something with a 1% spread, much less likely to make you money than something with a 2, 3, 4, 5% spread. So another good reason to trade GDX over GLD. So thanks. Traders helping traders. That's what we're all about. Kaylee's asking, what are my thoughts on Apple? I just like to buy my wife gets the Fuji apples. Those are really good. And sometimes the Gala Delicious apples are good, but I don't trade the stock. Too expensive. Kind of a funny answer. What a smart ass. But it's the truth. I do not trade Apple stock. Only a complete fool would trade Apple stock. Only morons trade Apple. Why would you trade $100 a share stock? That's stupid. Just because some stupid educator out there, hey, trade Amazon. It's $600 a share, but it's going up. Trade Priceline. It's only $1,300 a share. Don't go out like that. Trade professional charts that have much better percentage, multiple decade values of percentage. Solar City's a nice rock star chart. Why would I trade an Apple that has the same point range when for a third the price or fourth of the price I can trade Solar City? Never trade Apple, never trade Amazon, never trade Priceline or Netflix now. I used to trade Netflix when it was under 100 a share back in the old days. It's all about leverage and making money. You can't make money it's all about risk reward. Okay, so I do like Fuji apples. My wife's from Japan and she gets Fuji apples. But why would you trade something that's a $100 stock with only an 8-point range? At best, you might get 3 or 4 points spending $100 per share to do so. Right? Solar City gives you 26 to 37, a 10-point range, twice the range, or 1.5 times the range for a fourth of the price. Make sure your numbers add up. Don't trade stupidly overpriced or the wacky penny stocks that are all over the place. Trade in the middle. 30 to 50 bucks a share is the sweet spot for good professional trades. It's not your fault. It's these moron educators out there saying, trade Apple. Don't trade Apple. I don't trade Apple. I eat apples. I don't trade them, though. Jack's telling me he's still writing Activision. ATVI. Let's see what that's doing. Yeah, it's good. That's a good chart. Thanks. That's one of the earlier picks we called for our members. Let's look at the daily and see what's going on. That's a great chart. Yeah. That should have been on the list for this week. That was a good one. So thanks, Jack, for the heads up. Good teamwork. ATVI is a good... Yeah, that's in my core portfolio box still, so that's good. But yeah, Activision's a good chart. Now, let me ask a quiz question. I always like doing this for all my Swing Scans members. Where would you add to? Let's say you're Jack and you're in long and you're happy because you took my long call and you're up in the money a few $100. Where would you add to a winning Activision? And again, why would you trade Apple? Sorry to jump on Apple, but why would you trade a chart that looks like that? Only a great fool would trade a chart that looks like that. Why would you trade a chart that looks like that? Help me understand. Why would anybody trade Apple? It's a stupid chart. You're not going to make money with that chart. I'm a professional trader, and I could make money with that. This chart, though, I could, right? Activision. And congratulations to Jack for taking that call. Boom. Where would you scale in, guys and ladies? Where would you scale in? Where would you buy more Activision? Okay, see, 40, 50, 40, 20, 40. Thanks, Mike, Kaylee, Padma, Vin, Stan, Deanna, Jamie, Jack, Phil, James, Richard, Bo, Perry, Juan. We're seeing all 40, 20, 40, 30, 40, 50. Exactly right. Somewhere between 40, I would use say 40.20 to 40.50 would be the scale in. So good answer. Good job. That's where you scale in. Good. Now would be a good time to start doing what? If you're Jack and you're long, what would you be doing? Tightening in a trailing stop to lock in a profit, right? You got a big up day yesterday, looks like, right? Man, bullish cup day yesterday. That's good. I'd be trailing a stop at, say, 38.30. So I'd sell this puppy all at 38.30. I'd play it real tight. You can always look at a sequence of winning trades. You get, again, a good professional trader is going to squeeze as much money as they can out of a trade. So if you bought in during an uptrend, kind of like clipping a hedge in your garden. Not that I do that. My gardener does that. But if I were my gardener, clipping the hedge in my garden, you want to clip off a leaf or clip off an apple, the fruit, not the stalk, and take it and take a bite. Finish up your trade at resistance. So we're getting up to near where it's getting a little ripe, right? The apple's getting a little ripe. Activision, I would be tightening in a trailing stop as we get close to the 40 mark, right? Then you can rebuy over, say, 40 and a quarter, 40, 30, 40, 50, like y'all mentioned. So good point. Question from Jack, do I have trailing stops active through off hours? No, I don't, because sometimes you get, the reason is you get shenanigans and BS from the professional traders on Wall Street. Those guys are experts at taking money, right? And what they do is they'll often they'll do out, this is the shenanigans from back in the 90s they'd even do, they put in out trades, say on Island or Arca or Instanet. My colleague Don Bright, who unfortunately just passed away, a big surprise to all of us because he was only 65, but Don Bright is the world's foremost, or was the world's foremost expert on order routing and order flows on the exchanges. And one thing I learned is oftentimes you'll get out trades that are purposefully set there to take out existing orders. So you don't want to fool around with out-of-market trading. I've made my best profits in my swing trades by selling gaps up that start to fade back pre-market, but that's only with live trading where I'm doing that live. I don't automate sell stop orders or sell stop orders pre-market or post-market. But if you see a gap up that then starts to make a bearish cup and start to fade down, take that trade and be done. Look at my Trading Talk forum, www.tradingtalk, TradingTalk, tradingtalk.com forum. And if you look at the sell time for a lot of those real money trades, you'll see a lot of times it's say 8 o'clock or 8:30 in the morning. And I banked big profits on swing trades that I sold pre-market. If you see a bearish cup, I'll often sell a bearish cup. That's what I did with my inverse ETFs. They were making a bearish cup, and I sold right on the open because of that. So, good tips. All right. I think that's it. Yeah, right, Barry. It's a good say about Apple. And right, Stan is right. Apple's an investment if you bought years ago, like Microsoft or Netflix for that matter, or Disney, but not so much a trade. You want to trade things that have the right volatility and volume profile that are more likely to continue after you get into them. So you want to trade charts that, that have reasonably good potential, that have sustainable point range, right? You don't want to trade instruments as a swing trader that are up and down and wacky, because you'll just get frustrated or anxious. I used to get anxious a lot if I get in something and it comes back down to within a support resistance region, because often it'll just sit there and won't go anywhere, or other times it'll go against me. So that's no good. What you have to do instead to replace your trades for your swing trades is identify those types of charts that are most likely to keep going up after you get in. That's kind of the trick, right? Is only buy charts that are likeliest to keep running in your favor after you purchase that instrument. So that's what I like to specialize in, helping all of you here at Swing Scan. So thanks to all of you for being here. Have a happy and safe holiday season ahead. Celebrate your victories, lessons learned, and all that from the stops, and figure out how to turn things around with my help and the help of others out there who can help you really make the most of your trades. So thanks so much for being here. It means a lot. I'm going to go spend some time with my wife and daughter. It was our 17th anniversary. Can't believe she put up with me that long. I'm very difficult. I'm not controlling anymore. I used to be really controlling. Now I'm not. I'm like, hey, whatever. But I used to be very difficult. I probably still am. But anyway, 17 years married. That's quite the accomplishment for any woman. I should give her an award, right? She has these big diamond rings and fancy cars and all kinds of clothes and Gucci bags and all kinds of stuff, material things. And for my daughter, the house looks like a toy store, so she's got every toy and learning tool known to man. For me, I've got lots of books everywhere. That's my wife's number one complaint, is I got all these books. I continuously learn. I don't like electronic screens to learn from. That's for the birds. I'm 51 years old. I'm old school. I like a book that I can dog ear and underline and highlight and actually flip through quickly, which you can't flip through quickly on a Kindle or something. So I've got stacks of books all over the place. Like Jim Rohn said, poor people just have big TVs. Rich people have big, who can fill in the blank? Poor people only have big TVs because they erroneously just look at self-gratifying stuff. Big people have rich, starts with the letter L. Right from Bo, Phil, and Jamie. Libraries. Boom. All right, Fritz. Yeah, 17 years. She deserves it. She deserves some kind of award. Well, I've been faithful for 17 years and always a good provider, and honest and all that, so that's good. But yeah, big libraries. Feed your brain. Not just video stuff, but learn from... I like Brian Tracy. His videos are great on his YouTube channel, but, Earl Nightingale, The Essence of Success, audio recordings. He's got such a good booming voice, right? No longer with us, but he and Jim Rohn, and I like Tony Robbins stuff on taking action and changing, make transformation changes quickly, and what you do as a trader too helps, and especially Brian Tracy on time management, productivity, and goal setting. So, and communications. Anyway, y'all take care and have a good one. Okay, Ken, congratulations! You had a 14th anniversary. Yeah. If you can get past the first 2 or 3 years, you're usually in pretty good shape. I found the hard way from experience. But 17 years, wow. Doesn't seem like just yesterday, but it doesn't seem like 17 years have gone by. It's like 4 college degrees, I tell her. It's like getting 4 sequential college degrees in a row. I hope that you all have happy personal lives and families and all the rest of it, and wanted to wish you the best for making good trades. Good time of the year to look back on our successes and our areas for improvement as traders and resolve to do things differently. Main thing in trading, I've learned in trading millions of dollars worth of stuff, is a lot of time, despite your best intentions, things still won't work out. So the only countermeasure is keep really, really tiny stops. Start off all trades 20 to 50 shares at the most. Keep real tight stops. I would any day of the week rather take 10, I learned this the hard way, I'd much rather take 10 $50 stops than one $500 stop because I got 10 chances to be right. And odds are at least 2, 3, 4 of those will work out. At least make a little bit, and maybe 1 or 2 of them will keep running on up for a long time, and I can scale into it. And that not only erases the cost of the itty-bitty stops that I spent getting there, but also put me in the money for that group of 10 stocks, right? And that's really key lesson learned. I wish I had been able to tell myself that 20 years ago. But anyway, there's no excuse and no validity behind large stops. There's no redemption in large stop losses. So the only way to survive as a trader and to make money is to keep those stops as tiny as possible. That's your only protection, and that's the only way out. That's the only way to make it as a trader, is expect that you're going to... This is about my 30% rule, and I'm going to wrap up with this. So don't worry, I'm not going to keep talking forever. I know you got things to do, places to be, people to spend time with. But my 30% rule that I had a slide on from previous training was, and I showed P&L proof of one of my $1,700 winning trading days in which I was 70% wrong stop losses, right? 70% of my trades were red, losing, but they're real tiny stops, right? And the 30% that were winners were much bigger winners summed up than the cost of the small stops. So my 30% rule is figure out how you can make money and this is the most important thing you'll learn from me as a trader. You have my word on it. Figure out how you can still make money as a trader being right only 30% of the time. And the answer is simply in position sizing and scaling. Not making it complicated, but a little bit of the time, add a little bit to winning trades and keep really tight stops on everything else, right? Figure out how you can make money being right only 30% of the time. The only answer to that particular Rubik's Cube, that only particular solution set, comes in really tight stops, like any professional trader will tell you. If you look at the guys in the Chicago Mercantile Exchange, the E-mini traders, the floor traders, and the futures pits, those guys might be right 22, 26% of the time on a good week. That's not a number they care about. That's kind of an incidental number, not what the retail traders would look at. Retail traders, it's all about, can I be right in half of my trades? Wrong question. The success of your life depends on the quality of the questions you ask of yourself and others. Right? Also, when you're in a job or in a career or working with client companies, the intelligence of the question you ask lets the other person know where you're coming from and is a big factor in your own personal success, I found. Well, as a trader, the same thing is true. The right question is, it's like, was it the doors, no one gets out of here alive or whatever? Well, as a trader, how do you make it being right only 30% of the time? And the correct answer comes from keeping really tight stops. If you take, seven $50 stops, and you take 3 winning trades, of which 2 of them are a couple $100 in the money, and others $100 in the money, you still made a couple $100 on that set of 10 trades, just with really tight stops on the 7 that didn't work out, and modest wins. Maybe you got one that was a big win, but usually you'll just get modest wins out of the 3 that worked out. So you need to ask yourself the right question of how to compress your stop loss cost. So you take a lot of shots. It's like playing poker. You sit there for hours. You may get one good starting hand an hour or something. You got to fold, like Texas Fold'em, right? You got to fold a lot of. That's what I joke sometimes. So I play tight, but I win because I play tight. You fold a lot of hands because 7-3 offsuit. I ain't gonna play. I don't care, how weak the other players are. I'm gonna wait till I got 10 jack suited or better or something like that. So as a playing poker, you fold, know when to hold them, when to fold them, like Kenny's song would, Kenny Rogers, a gambler song would say, make sure that you fold a lot of your hands as a trader early and often. You fold a lot of tiny stops at the very first sign of trouble. Only play to the river the ones that are actually worth playing, and scale into them. Put more chips in the pot so you can take more money at the end of the cycle. So anyway, that's my thoughts on swing trading for today's broadcast. See you guys next week. Thanks so much for being here, and have a great weekend ahead. Oh, thanks, Dan and Damon. Yeah, I went a little long today. 39 years of staying. Congratulations. That's got me beat by twice. So, yeah, from Mukesh, good marriage is the first sign of financial success. The main thing is having a stable family so that you're not wasting a lot of time out there trying to find Ms. Right, or waking up with strange women all the time like I used to in my 20s. I mean, it's fun, but it doesn't really get you anywhere. It's kind of like never confuse activity with results. One of my favorite sayings in life. Never confuse activity with results. I even have that written down on one of my whiteboards here in the office. It's been there for 15 years. Never confuse activity with results as a trader and in your life too. So make sure it's all aimed toward the right direction ultimately so you can make it and whatever you're trying to accomplish. So thank you so much for being here. And I think that's it. Oh, no, sure thing, Mike. Sure thing, man. 30 years. That's great. That's an accomplishment. Give yourself a round of applause if you've been with anybody longer than, say, 5 years. That's a big accomplishment, actually, to be able to spend time with someone for 5 years and not get frustrated. So that means you're on the right path. And making money as a trader maybe takes a bit longer to learn, but ultimately, when you make it, what you find is, last thought, one of the things that helped me turn around my trading, to go from losing trader to scratch trader to winning trader, was make sure it's not just trading for yourself. Like, have a picture. I know some of the best Wall Street guys always have pictures of family in their offices, like many good executives have, right? Make sure that you're trading for not just yourself, because then you'll often kind of do break-even trading because maybe you don't believe that you should be making a big fortune because all you're doing is clicking a mouse. Why should I be making 1,000, 2,000, 5,000 a week or whatnot? What you want to do as a trader is make sure you're trading for yourself plus one, right? Or plus your family, or plus a charitable contribution that you believe in, or plus some other thing bigger than yourself. It can't be just about you as a trader. It's got to be about you plus a family, plus someone else, and then you're trading for not just me, but I'm trading for me and my wife and my daughter, right? Or me and my wife and daughter, and if I want to give to, children's hospital funds, which I do or whatnot, you trade for something you believe in plus your family. And that's, I know it's just that's kind of the mental psychology of trading, but I found that helped me enormously because you keep little tighter stops when you realize, hey, it's not just my money, it's my money and my family's money I've got on the line here. So that keeps you not nervous and scared as a trader. Maybe the first starting it is, but eventually you get to a place where it's me plus my family and me, the other people I care about that I'm trading for. So I'm not going to screw around with their money and a daughter's college education fund by risking stuff on some $300 stop loss and hope it works out. You don't do that. You develop the discipline, the internal integrity as a trader to be able to keep things tighter and more focused when you're managing your entries and exits. So that's something that helps as well. A parting thought. That's my holiday gift for the weekend. So you guys take care and do well out there, and I'll see y'all next week. Bye bye, everyone.